elevation. Big blunts, dope boys wanna smoke with me. Now we ride double M's through the whole city. Niggas talking down, but they always feel me. A 9-figure nigga, all I wanna talk is business. I seen a big mouth get a closed casket. Self-made, took over the whole racket. A kilo after kilo, see who moved the most. 200-foot yacht, she wanna see the coast.
What's going on, guys? Welcome to a Patreon promotional, which means that this will go on the Patreon first and find its way onto YouTube later. We're going to be looking at a ticker, gambling.com Group Limited, ticker GAMB. Trades on the NASDAQ for $5.30. Market cap is $186.38 million. All right. Price action year to date is negative 62.36%. What is the company? Where are they from? We'll talk about their business model and see if this is an investment opportunity. All right. This company was brought up to me by, one of my higher caliber investors on my Patreon. So I'm going to take a look at it. All right. So this is a marketing company. It's a marketing and advertising company. Now, they do have some financial function of embedded into their business model where they actually ensure that bet payouts are paid, okay, within the actual companies that they service. So the idea is they are an advertising data collection company that services online sports and betting gambling websites, okay? And they're headquartered in St. Helier, Jersey. To the naked eye, you think like, oh, they're in New Jersey in the United States. No, this is a foreign company. We'll take a look at Google Maps. They're over here next to France on this little island here. So there, if we zoom out and to see where they're at in the world, this is where they're at, guys. All right. So a lot of their customer base are European gambling websites. Okay. So that's something to consider. We'll look at their actual management team. Listening to the conference call and how they've handled themselves, I can tell they're shareholder centric. They're very motivated about shareholder value creation. We'll get more into that, and I'll tell you what they need to do to create that. But let's look at some other things here. All right. We'll go to their valuation. Disclosure, as I'm going through this, I do not own shares of this company. So you're just getting a non-biased opinion on what I think about the stock. Debt, 88.20 million in debt. Cash looks like 7.86 million. Market enterprise value is 266.73 million, but their market cap is trading at 186.38 million. Let's look at some other valuation metrics. Price to sales looks like on a forward sales metric 1.13 times against sector median. We're underneath sector median at 1.23. And on the trailing, we're a little over sector median of 1.18. EV to sales is a little bit higher due to their higher enterprise value and that debt on the balance sheet. Non-GAAP PE metrics looks like we're trading at 3.68 on the trailing and 4.06 on the forward. So very low forward non-GAAP PE. All right. Members of the Patreon, I want you guys to reference Hidden Gem, free cash flow, or profit. All right. So I want you guys to check this video out and pertains to this stock. All right. So now that we got that out of the way, let's talk about the earnings call. All right. So they reported earnings on November 13th. Little bit, I assess from management that there's a little bit of disdain towards the market on how their stock has been treated. They've guided that they're getting away from legacy SEO enterprise and diversifying the business to more of a data collection, advertising and marketing sector, and settling of bets function on some sort of financial function. So there's a lot of stuff going on there. All right. We'll look at their profitability, high gross margin, high leverage free cash flow margin, 93.17% gross margin. Crazy, crazy high. Leverage free cash flow, 36.34%. We'll go to the cash flow statement. And as you can see here, cash flows have been positive for 5 years and growing. Okay. Sure, there's some years where they took a hit, but for all extensive purposes, it's going up in a dramatic way. All right. So, income statement. All right. Sales are skyrocketing from 2016 to trailing. We went from 2.4 million to 154.5 million in sales. Share count is going up. All right. Uh, some decent dilution is happening, but notice from 2024 to trailing, decrease in share count. Okay. So they do have a buyback running and they are starting to deploy the capital. EBITDA is looking good. All right. EBITDA is going up. Earnings from operations positive. Everything's looking good. SG&A is a little bit up there, but what do you expect? We'll go to the back to the summary. My idea is like this company has 600 employees, so you gotta be able to take care of their salaries and so forth, and hire talent and etc. All right. Stock price action, no respect from the market. All right. There has been some weaknesses, some changes on their legacy SEO product with Google, and some updates Google has made to their suite of the Google search and so forth. So there's some spam stuff happening there. So a little bit of a downturn there, but nothing serious. Let's look at their earnings growth of sales projections. They have 7 analysts. Sales is going up, projected shy of 30% this year, a little over 12% next year, and 10% next year. So double digits. Taking it 1 year at a time, I can see this growing. I can see 2026 growing higher once some of these headwinds settle. All right. Let's go to the 10. Well, not the 10, but let's go to the 20F filing and 6K filing due to this being an international company. Here's what I have noticed: they have filed under an emerging growth company, all right? And when they do that and they're trading on the NASDAQ, they get special exemption waivers to trade on the NASDAQ without proper accounting. So they will be going off IFRS standards. A lot of their debt facilities are based on SOFR tenure, which are floating rates against LIBOR out of London. Um, so pretty favorable depending on where their sales are coming from. So there will be currency headwinds and tailwinds and fluctuations thereof. All right. Um, as you can see, their actual statements of cash flow, everything is unaudited here. All right. And because they filed as an emerging growth company, they're waived. They don't have to have proper IFRS auditing to trade on the actual NASDAQ indice. All right. So what does that mean? Okay, so what that means is they don't have to disclose certain financials, and there's no guarantee that the financials are accurate. All right. If they're unaudited, they're unaudited. All right. So there's that to consider. Now, they're going back to the actual earnings call. All right. The management, the CEO and founder expressing his disdain towards the market and what the market is doing to his stock. All right. Are you so as an investor, and what do I think about the investment proposition here? All right. So I like the management team, and I I think that they are coming from a pure point of delivering. They have the intent to deliver shareholder value. They want their stock to go up. They want respect. It seems like they work very hard on this business. These are mid-aged men and women. I think that, there's a lot of growth ahead. for their quest for growth in the business to make this a bigger business. All right. Um, so here's my take on the whole situation and why we're trading so cheap, or it appears to be cheap. All right. And also, if the management is looking at this video, all right, no, here's my message. Nobody has to respect your corporate profits of EPS. No one has to respect your valuation and growth of sales. The market doesn't have to give you respect for anything if you have unaudited filings. Period. Non-GAAP PE, the 3 to 4, you think that's low, you can go to a 1 PE on the non-GAAP. The market can put you at a 1 PE. Your actual price to sales can depress to a 0.20 price to sales. No one has to give you respect. All right. So that's my stance on that. If you can, on your next, if you want to solve the problem and get credit for your corporate profits and EPS, you want your EPS to yield against the equity, to get the equity to boost up, get audited and stop filing as a like a growth emerging company. Get proper auditing for the 20F, follow the IFRS standards, and so forth. Okay. If you do that and the numbers are legit and the audit goes through, your stock's going to 3 to 4x right away. All right. So that's my take. And that's in reference to purely corporate profits of sales and net income. Now on the free cash flow side, I assess this is a free cash flow play. Okay. What can the management do to get over the hurdle of unauditing and disrespect towards the equity? And is there something they can do to get respect for their equity without proper auditing and continuing to file with waiver as an emerging growth company? Yes, there is. All right. And so what's the answer? The purest form of investment is realization of capital through dividends. If this company started paying dividends, a lot of your credit is going to be, the market is going to view your stock way differently. All right. We'll go to the dividend. They're not paying one. All right. But the assessment of yield is based on some EPS and different measures, but I assess they can yield more than these actual projections. And I'm not saying they have to pay a crazy high dividend yield or pay out the majority of their free cash flows, but if they start paying dividends at just a 10% payout, and even if the yield is like 0.30% or 0.40%, and they grow the dividend year over year, and they pay out on a quarterly basis on schedule, and they include that on the earnings, and then they capitalize off that as a measure for their attempt to create shareholder value, the market will respect the stock, and free cash flow dividend investors will start flooding into this equity. Meanwhile, on a tailwind, they can grow out of the whole emerging growth company filing. I know it takes money to get that done, and the management is probably not prepared at this time to pay for that auditing and go through the hassle of getting out of the emerging growth company filing and getting a waiver and so forth. But I mean, eventually, if you're growing sales enough, you're eventually going to get to that point to where you're going to have to do that anyway. All right. Debt reduction and buybacks. They got the buyback running. I think we got 15 million on their authorization here. Yeah, 14.4 million remaining on their buyback authorization. I mean, that's cute and all. When I see when it's a free cash flow play, and I see the debt right here, That's opportunity for enhancement of efficiency within shareholder value creation if you're using free cash flows. Excuse me. If the free cash flows grow year over year dramatically, they can eat away at this debt like nothing, and then they can start putting cash on the balance sheet, buying back shares, paying dividends, and so forth. All right. That is the way to do it if they want to continue filing as an emerging growth company and they want to deliver shareholder value and they want to get respect for their stock. If they start a small dividend and they're getting, great, if their free cash flow is growing like crazy, I know a lot of management teams will be concerned about having to maintain and grow the dividend, so they don't want to make the yield too high. Here's the solution for that. You start a small dividend, but you commit to growing the dividend, maybe at a 15% CAGR on the dividend growth. And you maintain it for several years, in fact, indefinitely. And with that, you have more buyback accretion, accretive shareholder value delivery off the free cash flows. And so they're using 10% of the free cash flows to pay for the dividend, while they're using 30% of the free cash flows, 40% of the free cash flows to buy back the stock, pay down debt, whatever. If you get a great year, pay a special dividend. When you start paying, if you grow a quarterly small dividend, and then you stack special dividends on top every once in a while. I'm not saying you got to do it every year, but on your good years, every so often pay a fat special dividend on top of the 4 dividends, and then do buybacks, pay down debt, continue to grow free cash flows. Your stock's going to get respect. Even when you just start the dividend and it pays out, the stock will go up. All right. So that's my take on the investment. If you're getting value out of this, like and subscribe to the YouTube channel. All right. Check out the Patreon if you want to learn more, be with a community of like-minded investors and get more direct access to me. $10 a month, really can't beat it. 9 spots left. All right. So I hope everybody got value out of this. I appreciate all y'all support. Y'all mean the world to me. I love y'all. And until the next time, take it easy.